Hello and thanks for joining me again. This is the US Futures Weekly Chart Analysis for the week ending 17th of June 2022. First chart, as always, is the US dollar index. What happens in the US dollar makes considerable difference to many associated markets, so we always look at that first. The important level was here towards the upside, and there towards the downside. You see prices trading in this range. Now some supply was drawn out previously here, and price came down in response. There was a recovery, price moved up this week, but once again there's been some supply drawn out. It's pretty obvious, and the high volume suggests it was pretty significant. So you've had supply drawn out a couple of times at this level. This might be a telltale sign that price is going to come back again. We'll just have to wait for confirmation next week, but it's certainly ominous that this is very high volume. This is pretty serious volume. The volume before it was for rollover, contract rollover week, same as these ones, but this week's volume up here was not contract rollover. This was traded volume, and prices closed well off its highs when it was challenging the previous highs where supply came in on reasonable volume. If sentiment starts to change in this market, it will affect so many other markets. So just be aware that there's a possible change on the horizon. If price explodes out next week, well, then it was absorption, and the market was absorbing supply, and it subsequently accelerated higher, and that can well and good happen. But if this was supply coming in, this was selling pressure, then you'll probably see a down bar next week in response, most likely. And if the market was to break below this level, this is the important level where price accelerated higher, I would see price moving back here initially, and then you've got a level back through here, which is almost one big complex zone. We'll just see how the market plays it if it does break down. But you've had supply drawn out. Let's see what the response is next week and see if it's confirmed or not. Next market is the S&P 500 futures. This is the E-mini. Price closed below previous support this week, clearly below previous support. Volume was very high. That's bordering on excessively high. And when you get excessive volume, it may mean the market's in position to reverse. So just see what the response is next week. If we come out a bit wider to see where previous support is sitting, this is the obvious zone here. If price continues lower, most likely there, just below 3,500. Now, look how high this volume was last week compared to all the previous volumes back to the COVID pullbacks here. It's the highest volume by a mile. This was excessive volume. Now you've had some weakness or potential weakness come in the US dollar index. I really won't be surprised if the market attempts to recover next week. We'll see. It's a pretty hard ask. It'll require some real effort to take place in the market, and if it does, it'll be significant. If not, and price continues lower, this is probably where the market will attempt to find some support just below the 3,500 level. The next market, I usually do the 10-year note now because it's usually trading the inverse to the E-mini S&P 500 futures. Now some buying support's likely come into this market this week. You see price didn't really break down last week. It was threatening to break down, and this week prices moved lower and then seen some sort of buying support emerge. Volume increased and it was above average. so it was likely significant. See what happens at this level next week. If price can pop back above it and confirm this buying, then we've got another suggestion that some sort of change is happening in the market. So some buying came in this week, and once again that kind of confirms the weakness seen in the US dollar index. Things are moving together to some respect. Let's see how it responds next week. Next chart is copper price futures. Copper price futures are holding on just below the $4. It's an important level on this chart. There's some congestion through here where price, when it was moving higher, spent some considerable time consolidating through here before it accelerated higher. There was an attempt to support the market back here. Price moved up. It did close this gap, or very close to it. And price has come back on this weakness. If it can hold on to the $4, it'll be doing a good effort. And if further weakness comes in on the US dollar index, I'll expect some sort of reversal next week. So looking for some real interesting responses next week, depending what actually happens in the US dollar index for the most part. Next chart is gold price futures. Gold price futures have been very resilient. This is the important level to watch. Now you'll remember that the US dollar index pushed higher and then closed off its highs, and in response this market has pushed lower and then closed off its lows. The exact inverse, which is what you'd expect. Price held on to these lows comfortably. Volume was increased. If price can push out above this level, the congestion above, bordered here, is the important zone centered around 1950 on this chart. This is the futures chart. This is where you originally had some sort of resistance form. Price, if it breaks out next week, or it moves at least up to this level, which is 1867.9, if price can get above that level, it should get up to 1900 without very much resistance. But then just above 1900 is where this congestion zone begins, and I would expect more difficulties through here. If price was to push above the highs of this zone, then there's relative clear air above. The next market, silver price futures. Silver price futures are acting considerably weaker than gold. Keep on saying that. But this was a promising bar on an increase in volume. Definite buying support coming in on this bar as price is tackling this $22 level. If the US dollar index does move lower next week, I would expect a challenge to this level next week. And it shouldn't be too difficult to move up to 24, where this gap takes place. A move above this level will be more difficult. You have this congestion zone here to contend with, and it's likely to be a little more difficult to negotiate. Remembering that gold is up just below this level up here, so silver has a bit of work to do, but this week's bar was definitely more promising. Light crude futures have been one of the stronger commodities recently, and even they weren't immune to moving lower. You can see price has been absorbing its way higher for a period now, and price has probably closed just below that. You've got support through here, remembering that this bar actually continues down to there, sort of like this. So this is the lows of the range. It would really take a clear break below $90 for this market to show any serious weakness. Anything in here will just be further consolidation. Volume was a little higher this week and higher than average, but not excessively so. So while selling pressure did emerge in the market, it doesn't look like it was overly serious. See what the response is next week. That might clarify things a bit more. I'm not expecting anything too serious at the moment. Aussie dollar currency futures. The important level is 70 cents. Price pierced this level quite deeply back here. And once again, prices pierced this level deeply again. Now, buying support did come in off the lows, and it has again this week. But the fact that the market is able to penetrate so deeply below the 70 cent level is a concern. If further weakness comes in, this market will break down for sure. It's only barely holding on. You see, when the buying support came in on this bar, price did push up, but on reducing volumes. So that's not a very strong response. It's a response, and it was partly the inverse of the US dollar index at the time. When price moved higher, prices come back, trading the inverse of the US dollar index again for sure. Buying supports come in off the low, and this time volume was higher, so that is something. If the US dollar index trades lower in response next week, and there's some chance it will, price will pop back above 70 cents. But I don't like the fact that the market is able to deeply penetrate an important level like 70 cents. 70 cents is a longer term important level. Once again, we'll watch for the response next week. There is some chance price will move back above 70 cents, especially if the US dollar index moves lower. Finally, this is Bitcoin futures. Bitcoin futures broke down clearly again last week. You can see here for a bit of history, buying support came in here. Price moved up in response, but found supply coming in here, and then an inability to break out. Price moved lower in response and broke down below those lows. This is the more important level here, and buying support came in on this bar. This is the volume, and further buying support came in here. I was calling this as consolidation last week, but price is clearly broken below the lows of the range. This is a clear break. There is some support around 20,000. If it can hold that level, that's well and good. Let's just have a look quickly. You'll see if price can break through this little period of consolidation here around the 20,000 or just below, then you've got this older, probably stronger level that comes through here. It's probably at about 12,000. But there is good support here, right down to there. That's 4,000. So 20,000 or just under really needs to hold here. If price can't hold on at that level, then it's probably going to come down to these levels centered around 10,000, with the lows of the range being 4,000 and the highs probably around 12,000. You can clearly see how price is traded. It's quite logical trading. It all makes sense. It's quite a difficult market at the moment. So I would be looking for this minor level around 20,000. It's 16,000 to 20,000 by the looks. And it really needs to hold on to there or it's going to come down to the 10 or 12,000 or lower. Okay, and we might move back and just look at the US dollar index just quickly again, because this is a very important chart for many of the markets. Seeing as volume was really quite so high last week on a bar that's closed well off its own highs and back level with where supply came in previously on this bar, perhaps we should look inside this weekly bar and just see how it's comprised. So this is a weekly chart. If we move back and look at a daily chart, we'll be able to see the bars that make up the weekly chart, which was these 5 bars. 1, 2, 3, 4, 5. Now, for the first 2 days of the week, price moved higher on reducing volumes. That's these two here. So there was no massive demand in the market, and you can see demand was really quite low on the second day. Even though price floated higher, it obviously wasn't with conviction because volume had reduced considerably. And then this is a bar that's closed off its high on a large increase in volume. This was selling pressure coming in by the looks. Sure, markets moved lower, then up, and then closed off its high, but on that much volume, with what we can see, the next bar down in response, that was selling pressure coming in there for sure. Then the markets moved lower on above average, but there was a reduction. So that would tell you that buying support was absent in the market, and that's why price could move lower on reduced volume. There was reduced demand in the market and price had to stretch lower to find buyers. And then on Friday, price moved higher in response. This was a fairly large move on Thursday, but volume was below average. So selling pressure might have eased, but buyers weren't stepping up. This was below average volume. On an inside bar, I would suggest that selling pressure has certainly come in on this market. There was little buying pressure here, selling pressure on these 2 bars, and there was little demand come in the market. The only reason price really went up there is most likely because the sellers stepped back this day. So let's see what happens next week, but selling pressure definitely came into this market this week. Let's see if the sellers continue to push next week and gain the upper hand. There's a bit to go on yet before price could really break below this level. Selling pressure has come in, and that's what's going to happen initially. These lows and the lows of the range will be the important levels to watch, and because the US dollar index plays such a large part in many currency futures and also in many commodities that are priced in US dollars, any sort of weakness in this market would be significant tailwinds to those markets. Okay, thanks for your time again. Let's see what happens next week. See ya.